And it's time now for the Wall Street Beat. We're going to take a closer look at how Wall Street is trying to refuel the private credit boom. Direct lenders are hoping retail investor strategies can increase growth because investments from asset managers, pension funds, large institutional investors have flatlined. Here for more, we are joined by Bloomberg's Denitsa Tsekova, who has been reporting on Wall Street's big Main Street push. You think about the returns you can get in some of these interval funds. You were talking about one woman that was getting a 37% return over 2 years, wanting to access more. Do these last? I mean, ultimately, do retail investors believe that they can get above average returns over the longer term by shifting some of their allocations over?
For sure. So in the last 2 years, it's been obviously a very lucrative investment, and all the retail traders we spoke to are quite happy with the returns. It's been a good time. Also, a lot of the retail investors we spoke to, they're investing in all those big names. They have Carlyle, they have Blackstone, which potentially have much longer history and less issues with redemptions, even though some of those firms do have issues. But now what we're seeing is amazing proliferation, and we're talking specifically about interval funds, and so many big and small names are entering the space. And what we're seeing is that with any proliferation, products come with different quality, different minimums. The thing about interval funds is you can lock up investors for significant time. So you can imagine we've seen some funds lock up investors for 7 years.
Oh, wow.
A lot of the big names, it's much lower. People can redeem their shares every quarter. So it's a lot more accessible. Well, we've seen some extremes in terms of how long those products are holding investors.
And so we only have about a minute left with you, but I am curious what the pitch is, because of course you highlight a woman, like Shonali said, 37% return over 2 years, but you could get that or better in the public markets just by investing in the S&P 500.
For sure. I think the pitch is we're diversifying, we're giving you access to something only institutional and ultra wealthy individuals have access to, which I think is quite attractive to retail investors. That one thing that comes with the pitch is actually the fees are pretty high. And at least from the conversations, I'm not sure everyone's aware how high the fees are. Like the average fee is around 2.6%. And then a lot of those products work with incentive fees. So after you reach a certain threshold, you have like a 20% incentive fees. So if you had a great year, that's great, obviously, but then there are extra fees and extra fees. So it can be quite pricey.
Plus, you have to find out where you're going to actually buy this stuff.
True.
And, Apollo, Blackstone, they're trying to make this available for infrastructure, for private equity. Let's see if they could be as successful in those other products.
Got to get it on the app.